Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, December 12th, 2018. All right, today I'm going to go over three different stocks on three different time frames that are telling me key levels to buy. The first one is actually in play as of right now. I pointed this out a couple days ago to members. Look at the bottoming tail right there. Let me show you this a little zoomed in. So Goldman Sachs, unbelievable fall for a company like this just in the last couple months. Starting in early November, it was over 230. It just bottomed out basically at 270 earlier this week. The beauty of this was you saw that the stock dipped on Monday here, and then buyers swooped in, pushing it back up, creating a bottoming tail. Technically speaking, as long as this low is not closed below on the daily chart, this is a major pivot low and a screaming buy for a bounce into year end, into January. My guess is you'll probably see this head back up to about 200. Right here, there's some key resistance. You can see it right there. That is the trade. Long Goldman Sachs from this area. Stop is any daily close below this pivot low. So it's a tiny, tiny stop. I mean, look at the size of that stop. Current price right here. Here's your stop. What's your target? Upside right to that level. All right, let's go to the next chart. Next chart, Schlumberger. It has not hit the key level, even though I think it's getting a bit overdone, but we're going to go to the weekly on this because you have to go to the weekly. So we started on the daily, now we're on the weekly Schlumberger chart, and look at the fall it's had. 2, 4, 6, 8, 9. You're on your 10th week down here. Incredible. Now, you are potentially getting a doji here, which could be a buy signal, but what I'm really watching for is can it go down a little bit more to get down below 40. See this key pivot down here going back to 2009? That's what I'm thinking is going to be a major level. What's interesting about this, you could see the breakdown even before it began. Look at this beautiful trend line. I love charts, by the way. Charts tell us everything. And you can see clearly here, this trend line, look, it hits here, and then it rallies all the way up here, comes down, hits here, bounces, hits here, bounces, hits here, bounces, and then finally breaks through. And again, you could even, talk about a measured move like this high pivot to this low from this breakdown, probably right around this area here. So I would say there's not a whole lot more downside. It's starting to send signals of a bottom, but it could go down as low as, let's say, 39 and change. And then I think it's a huge accumulation zone if it gets down there. I mean, think about this. Back in 2009, this is where it was trading, and it's potentially coming back here. Oil, yes, it's down sharply from the highs, but it's still holding above $50 a barrel. I mean, that's not catastrophic for these type of companies whatsoever. So keep that in mind, folks. And again, Schlumberger looking very, very interesting. The last chart I want to go over is General Electric, slightly higher today. We're going to do it on the monthly chart here. This is where the key is going to be seen. You can see the fall this has had. This has been one of the biggest epic falls in a non-bear market activity market, meaning that, in 2008 and 2009, we saw ridiculous collapses on stocks, but that was in one of the worst markets we've seen in the last 50, 100 years, right? Probably going back to the Great Depression. It was the worst, craziest market action. So to see this fall in not that period is remarkable. I mean, it's something, GE is one of the longest known, wellest known companies in the world, been around for ages and ages. Really a fall from grace. Now, the thing is, it's starting to get attractive. Look back in 2009, you have a key pivot down here. It's just a little bit lower, right around $6, so I think it could go as low as 6 and change, maybe even the high fives. But this is this is to the point where people are pricing in bankruptcy, and I don't think that's going to happen. So I think that I love charts that happens in. So when everyone else hates it and thinks there's no value there, ultimately it's still GE. It has very key pieces to the business that they could sell off and make a lot of money off of and start building this thing back up. And that's what I think is interesting on this. So looking at this level, I would say it could go a little bit lower to this double bottom down here, which is just around 6 or just below 6. But then you have to think it's a wild card play for, a double or triple in the coming years. And again, I just see, I don't know. I think this is very interesting here. I mean, it's the new CEO is just in place. You got to figure the coming earnings could be interesting. My guess is kind of the selling and kind of weakness here. So, markets are up decently today. You're only seeing about a 1% gain in GE. My guess is there's end of year tax loss selling going on here. And that's probably why it's not bouncing more. My guess is once January hits and the tax loss selling's over, this could snap back just in that period back in January, it could go back to $8 or $9. I mean, it could, literally talk about 30% gain on this thing just because the tax loss selling is over. And obviously, bottom fishers and major technical traders are going to start to take note of this pivot low. So that's what I'm seeing here, folks. And again, this is what it's all about. I just want to say to you guys that we hope you come and join us here at InTheMoneyStocks.com. Take the 7-day free trial to the Research Center. I want to show you the track record for this year. I'm proud of it. I'm going to be honest. It's probably one of the best years I've ever had. This is our website. I'm just trying to get it so you guys can actually see it. Here's our website, InTheMoneyStocks.com. If you just scroll over here, you have under the free market action, here's our free blog, free email list, and then here's our track record for the Research Center. And I mean, this is just amazing, folks. Look at the gains here, almost 800% this year. And that's if you add up all the gains and subtract all the losses. So realistically, I always say, divide that by 10 because let's just say you're conservative and you only put 10% of your account in each position. Well, if you divide it by 10, you're still making 80% for the year. I dare anyone out there to go find any legit hedge fund that's returning 80% a year. You will not see that, folks. You can see the stocks we're trading, too. I mean, these are mostly large caps and mid caps. I do trade some small caps, but for the most part, I mean, it's all about, we're getting these gains from legitimate companies. There's a lot of services out there that, they'll trade micro caps, they'll do pump and dump nonsense, all that BS. And then they're like, oh, look, we made 800%. Well, guess what? You won't find any of that crap in here. I mean, we're trading ETFs and Home Depot and Toll Brothers and Wynn Resorts and GM and Blackstone and Desoxel and Nvidia and Valero. I mean, that's what this is here, folks. And you'll see some losses on here, too. I mean, by no means am I perfect. I am not even close to perfect when it comes to investing, but we do have an 80% plus success rate, which means 8 winners out of every 10. 8 winners out of every 10. By the way, the chat room's at 95% for the year success rate. That's 9.5 winners out of every 10, or 95 out of 100, which is incredible. I mean, this has been the best trading year for day trading because of the volatility, and swing trading too. I mean, this is an incredible. You could see the past years. I mean, 2017, 390. 2016, 568. You can see 2015, 638. So, in fact, this year is probably going to be our best year ever. And that's incredible profits. I mean, literally, hedge funds come to us and they say, hey, listen, can you guys train our pro traders, our hedge fund traders? And of course we do. And then they become members and they take the alerts and, essentially they're piggybacking off of us because we're that good and we give out trades like this. So in any case, bottom line is, folks, come join us. Here's the Research Center under Investor Trade Alerts. Just go to the Research Center. You can do options alerts if you want. That's if you're into options. But again, folks, I'm logged in right now, so this is a key into there. But if you just go back to the home page right here, you can clearly see that's where it is. And here's our services right here. The Research Center is what I recommend for most people because that's the average person that works is going to be able to do the swing trades and the options. If you're a day trader, then the chat room, 95% success rate speaks for itself, folks. Get in there and ask any member. They're just crushing it this year. Have a great one, guys. As always, thanks. Take care.